Ladies and gentlemen, good day and welcome to the H1 FY25 results conference call of Shera Energy Limited, hosted by Kiran Advisors. As a reminder, all participants' line will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Chandni Chande from Kiran Advisors.
Thank you. On the behalf of Kiran Advisors, I welcome you all to the conference call of Shera Energy Limited. From management team, we have Mr. Sheikh Naseem, Chairman and Managing Director, and Ms. Jyoti Goyal, Company Secretary and Compliance Officer. Now I hand over the call to Ms. Jyoti Goyal. Over to you, ma'am.
Good afternoon, everyone. Thank you for joining us today to discuss Shera Energy Limited's financial performance for the first half of FY25. We are happy to report our results this half year. We delivered strong consolidated financial results at Shera Energy Limited, with total revenue reaching rupees 601.87 crore, a substantial year-on-year increase of 56.57% from rupees 384.41 crore in H1 FY24. Our EBITDA rose to rupees 29.11 crore, reflecting growth of 15.12% compared to the previous year. We also achieved a significant rise in profit before tax, amounting to rupees 13.03 crore, up by 50.88% year-on-year. Our profit after tax surged by 57.37% to rupees 9.67 crore compared to rupees 6.14 crore in the same period last year. Additionally, EPS improved by 48.21%, increasing from rupees 2.24 to rupees 3.32. Our financial performance in the first half of FY25 highlights robust growth and operational resilience. We achieved substantial revenue expansion, underscoring our ability to capture market opportunities and enhance our market presence. Despite ongoing investment in capacity and expansion, our operational efficiency remains strong, evident in healthy profit margins and improved cost management. This profitability growth reflects our focus on sustainable value creation with enhanced returns to stakeholders and a clear pathway for continued expansion. The first half of this fiscal year has been transformational for Shera Energy as we achieved several key milestones. Our highest ever turnover was accompanied by our first African export order, opening a new market in Zambia, which we expect will pave the way for further growth in the African continent. Additionally, our recent production capacity expansion, both at the standalone and consolidated levels, positions us well to meet rising demand while maintaining our commitment to quality. I would also like to highlight the exceptional performance of our subsidiary Rajputana Industries Limited, which recently went public. This listing marks an important milestone for Rajputana and reinforces Shera Energy's strategic growth in key markets. Rajputana Industries recorded an impressive 80.55% year-on-year growth in total revenue for H1 FY25, reaching rupees 257.77 crore with a 62.75% increase in profit after tax to rupees 4.07 crore. Its successful market entry and growing profitability demonstrate its vital role in Shera Energy's portfolio, strengthening our consolidated market presence and enhancing shareholder value. Looking ahead, we are excited about the growth opportunities that lie before us. With our expanding footprint, strategic partnership, and focus on innovation and quality, Shera Energy is well equipped to lead in the global non-ferrous metal industry. We remain committed to delivering sustainable value for all our stakeholders as we continue to capture opportunities across both domestic and international markets. Thank you for your support and trust in Shera Energy. Now we'll look forward to taking your questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touch-tone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question may press star and one. The first question is from the line of Viraj Yadav from Raj Industries. Please go ahead.
Thank you. My first question is, what impact do you foresee from microeconomic factors such as currency fluctuation and commodity prices?
So, can you please repeat your question? You were too
Sure.
fast in asking. Yeah.
Okay, my question is, what impact do you foresee from macroeconomic factors such as currency fluctuations and commodity prices?
Currency fluctuation definitely plays a vital role into the business, and it has a vital role in evaluating the inflation in our country. But since the government of India, if you see, our currency is more or less stable in the range of 83 to 84, and I can foresee a huge backup by the government of India that Indian currency volatility will not be on a larger extent. But if you look into the international scenario for the dollar index, dollar is not going to change substantially because all international business happens across the globe in terms of dollar. Minor changes are always there, and that is well absorbed into the business by everyone. Coming down to the commodity prices, US election results are about to be declared in shortly. So it will have some minor impact on the commodity prices. But overall stability will be there because the commodity is having a lot of strength, and I don't foresee any decline in terms of prices in the commodity prices. Demands are huge. Yeah.
Okay, my next question is, what are your strategies for managing debt?
My strategy is always back-to-back buying of our raw materials. Whatever we sell, we hedge it back, and we never take a risk or we never take a benefit in terms of keeping our position unhedged. So we are not affected by any uptrend or downtrend into the international prices, either in terms of commodity or in your dollar prices.
Okay. My next question is, how is the company leveraging its relationships with key customers in the transformer and motor manufacturing sector?
Company is focusing increase in our customer bank. Primarily, we were operating mainly into Rajasthan. Now we have opened our horizon and we are reaching up to Assam also. So we are increasing our customer bank on a regular basis. We are introducing new customers to our portfolio, adding them, and the same work we are doing for our export business. So that's the reason you can see a substantial growth in the top lines, which is supported by the bottom line growth.
Okay. And my last question is, can you share the details about your R&D initiatives and their impact on product innovation?
Definitely. R&D is an ongoing process, and we are well equipped with all our metallurgists and chemists to do all requisite R&D to develop the different alloys. I'd like to give a light on the new innovations that is happening in our country, that is happening in our company. Company is now focusing and developing new alloys backed by nickel. Primarily, we do into aluminum, copper, and brasses, Now, nickel alloying is a new product that we are working with, and soon you will see their products in our product line, and we are going to be one of the very big manufacturers into the nickel-based alloys as well.
Okay, thanks.
Thank you.
Thank you. The next question is from the line of Yashwanti Khedekar from Arjoin Investments. Please go ahead.
This is Yashwanti Khedekar from Cogent Invest. Sir, congratulations. Great start for the first half, almost 57% growth in the top line and the bottom line. So wanted to understand what has drove such an impressive growth at the top line and the bottom line. The question number one. We are seeing the top line growth of around 57% in the top line and the bottom line, but our EBITDA grew only of 15%. So can you just tell us what are the things that is affecting our operational efficiencies, marring our EBITDA growth?
As I have repeatedly told our investors that company is maintaining its profit margins on a similar lines. But since we are going aggressive into the market, from 380 crores, we have gone up to 600 crores on consolidated basis. That speaks of aggressive marketing and aggressive addition of new customers. So whenever you are putting new customers into your lines, you are basically breaking some cycles of the existing market. There we had to sacrifice a bit on our sales price to introduce our products to various customers. Likewise, we have started doing the business around 2,000 kilometers away from our Jaipur horizon. That has also brought some minor impact in our costings, and that has affected our EBITDA in terms of percentage. But if you consider the volumetric growth, you will find it substantial growth. If we would have not done that, the volumetric growth would not have been achieved. So there is a marginal dip in terms of percentage into EBITDA, but volumetric growth in EBITDA is much higher than what we were doing in previous half.
So for the client acquisition, the volume growth is more considered at the cost of some profit at the initial phase.
Pardon.
For any new customer acquisition, we would be concentrating more on the volume at the cost of our operating profit for the initial period.
Madam, whenever you buy something, any product that is coming in the market, it has to be a reasonable in price. Commercially, the people will accept it that way. After you get the market share, then you can start driving your prices. You got it? If any product into existing market is launched, you have to sacrifice on your sales price. You cannot sell at the operating levels of the market sales, and otherwise the customers are not interested to buy. So if something is sold at $100, so when I'm coming in the market, I have to sell it at $95 or $97. So that hits your profit for a temporary phase, but in later stage, when the quality and everything is accepted, then you are in position to drive your prices and you are in position to grow your profits.
Okay. So also helping with your volume growth for the first half, if it's possible, is the number.
Madam, your sound is echoing. Can you, yes, please repeat again.
Yeah, I just wanted to know what is your volume growth for the first half, if the numbers are handy.
Madam, if I compare H1 to H1, we normally deal into aluminium, copper and brasses. So volumetric growth, if H1 you see 24, aluminium we did 4,834 tons. Okay. This year we have done 7,313 tons, which is increased by 51%. Then in copper product, last year we did 5,500 around. This year we have done 6,700 around, which is giving an increase in 22%. And coming to brass products, last year we did 1,200 tons around, and this year we have almost done more than 2,600. So Brass has given us a substantial increase of 116%. So these are the volumetric increase in our sales.
Okay. And compared to these three metals, so which metals drive the better margins here for us, for our product?
Madam, margins in terms of percentage is always higher into aluminum,
Okay.
and margin in terms of value is always higher into copper and brasses.
Right.
Aluminum is having a price of roughly 200 rupees. Brass is having a price of 600 rupees. Copper is having a price of 900 rupees. So if on per kg, if I'm making money 10 rupees per kg on aluminum, that will bring 5% margins. But if 10 rupees per kg is there in copper, it will give you only 1% margin. So whenever you calculate in terms of percentage, you will find variations. But volumetric, you have a better edge into copper and brasses. Likewise, why we were able to increase our profit in terms of volume growth, because we were aggressive in selling the brass products. So the profitability in terms of percentage declined, but in terms of value it increased.
Okay. So that is driving.
That was a strategic decision taken by the management. Yeah.
Okay. And that will be continued, right? Even for the H2.
Pardon?
This will be continued even for the H2 and going forward.
Yeah, if you improve into volume, you are in a better position to give good returns to your investors. Your EPS increases. But if you earn only in terms of percentage and volume is not there, the EPS does not increase. So for any business, a balance of percentage growth as well as volumetric growth combination has to be considered. Yeah.
So if I may ask two more questions. One is on your overseas subsidiary. So how is it gaining a foothold in the overseas market, basically your Zambian subsidiary? And how much contribution we can expect for FY25 from this company?
Now, in terms of sales, there is no contribution of Zambian origin till now. That company is under investment phase, where exploration of different mines and different cable businesses is in process of moving ahead. But you will find in second half of this year, we will be in position to start our operations into Zambia.
Okay. And so with regard to our Indian subsidiaries, so we have already listed the Rajputana Industries.
Yeah.
So I just wanted to know, like, are you also planning to, list your another subsidiary, that is Shera Energy Private Limited, in due course, maybe current year or maybe the next year? Is that on the card of yours?
Madam, this is a matter of decision taken to be by the board. But definitely we would like to do that. We have to work on this, but it will not be in the near future. It will take another year or so to bring that company into listing. Yeah.
Okay. And so my last question is, any new clients has been added in the first half of our currently?
New finance?
No, any new client has been added in the first half of the current year?
No. We are planning to do some capex in our subsidiary, that is Rajputana Industries, where we will be making very fine gauge aluminium wires suitable for fan industry and the geyser. There we have applied to the bank, and I expect their term loan to be sanctioned in a month's time, and then we will be in position to make a new investment amounting to roughly 15-20 crores. And once that is done, our performance of the company is going to further increase.
Oh, yeah. So you helped me with your capex plans, but actually my question was about
Pardon?
the new client. You helped me with your capex plans, but my question was with regarding to any new client has been added to the company's portfolio.
हाँ any
न्यू क्लाइंट नए कस्टमर्स आए हैं क्या? वी कैन ऐड एनी न्यू कस्टमर्स टू ऑल्सो.
बहुत नए एक नहीं करीबन 20% नए कस्टमर और ऐड हुए हैं मैडम.
Oh, that is really wonderful, sir. Congratulations once again for this achievement and all the best for the rest of the course. Thank you, sir.
Thank you madam. Thank you.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Paras Chheda from Purple One Vortex Ventures LLP. Please go ahead.
Yeah.
Yeah, hi. Am I audible?
Yeah, you are audible.
Okay. Yeah, congratulations, sir. This was an excellent set of results, and I can see the progress going on. I just had a couple of queries. The turnover has significantly increased. In my understanding, which I had also confirmed last time, the Zambian operations now, with this new pref issue, etc., will further, see expansion. So, which is probably a high margin sort of a business. Is my understanding correct that by next year, we had a talk of blended margins for the consolidated company to probably reach double digit somewhere there after the Zambian operation stabilize?
Yeah.
Would that be correct understanding?
Very correct understanding, sir. We will be touching double-digit EBITDA margins after the start of operations of Zambian.
Okay, so next year, full year, can we sort of assume like double-digit margins?
25, 26, yes. Definitely it will be there. 25, 26 will be there. Yeah.
Okay, so that's interesting. And hopefully if we land up somewhere around 1,100 crores in that region this year, right? I mean, what sort of an estimate would you, guidance would you give for the next year in terms of turnover for next year, broadly?
Broadly, since I have already spoken that our one more subsidiary is there, we are in line to do some capex there. And once the capex are done, it will give further increase by approximately 100 to 200 crores into our new products. And with existing growth, I can presume the top line to be in the range of 1,500 to 2,000 crores.
That will be for next year or
next year, next FY25-26.
Okay, in the region of 1,500 to 2,000 crores. Okay, that's quite interesting. That's about it, I think, for my questions. Thank you so much, and it was a great set of results. Congratulations and best of luck for the future.
Thank you. Thank you, sir.
Thank you so much. Yeah.
Thank you. The next question is from the line of Tara Kaur from VY Cap. Please go ahead.
Thank you. So my question is that, can you elaborate on the factors driving the impressive 56% of YoY increase in the total revenue?
Madam, with this year we have added more customer bank. We have increased our range of products. The range of product means to say the alloys that we were making, we have enhanced their range of sizes. So that has helped us to reach to some more new customers, and we have expanded into further into the new markets. So that has given edge to our business, and that's the reason we have increased our sales by approximately 50%. Yeah.
Okay. So may I know what is your hero product?
Pardon?
What is your hero product? Like, which product has given you the maximum revenue?
Maximum revenue is always governed by copper.
Okay.
And then it is governed by aluminium. And then comes the brasses.
Okay.
If you see our copper, we have done 7 tons approximately, and with a price of around 850 to 900. So the volume, value-wise, sales contribution of copper product is highest.
Okay. And so just my second question is also aligned with my first question, that we are seeing impressive growth in our top line and bottom line. So is it the same reason that we have diversified, we have expanded our product range and all that?
Yes, definitely, madam.
Okay.
Since we have, pardon?
Continue.
Since our products are, we are not relying only on single two or three types of products. We have roughly 15, 20 different specification of products in our product line that helps the company to maintain its top line, maintain its quantity of production on a regular basis.
Okay. Okay. And my last question is that this, when you say maintain, so we can expect the same in H2. So what will be our outlook?
Historically, H2 is always a better half than H1. Historically, it has been proven. So, backed by the history, I can foresee a better performance than H1 in H2.
Okay. That's all from my side. Thank you so much.
Thank you, ma'am.
Yeah.
Thank you. Participants who wishes to ask a question may press star and one. The next question is from the line of Amit Kapoor, an individual investor. Please go ahead.
Yeah, hi. Am I audible?
Yeah, you are very much.
Okay, thank you, sir. So first of all, congratulations for a very good set of numbers. So the first question I had was that on the consolidated basis, obviously both revenue and PAT looks pretty good. But on a standalone basis, it looks like the PAT has actually decreased H1H, not year on year, but H1H for Shera. So what could be the reason for that?
H1 PAT has not decreased, sir. If you see H1, are you comparing H1 or H2 to H1?
Yes, that's what I said, half and half. So H2 of fiscal
last year, yes, and you are comparing with H1. So if you have gone into the balance sheet, you just figure out one data is there, exceptional item or extraordinary item of sales. There was operational profit of H2 was 342 crores, but we had a extraordinary profit of 220 lakhs, 2.2 crores, which amounted to 5.62 crores. You got it clear? No.
Yes, I'm writing it down.
If you have the data with you, do you have the data of our results?
Yes, I do have, sir.
Yes. So if you just see the results, profit before exceptional item, the point number 3.
Yes.
The profit before exceptional item, that's an operational profit.
Okay.
So H2 was, sir, 342.
Right.
But below this line, you see exceptional item or extraordinary item.
Okay.
Extraordinary item of 2.2 crore was there in H2. That was basically a disinvestment profit of our subsidiary.
Okay. Makes sense.
We have disinvested some amount in our subsidiary, and that resulted us a profit of 2.2 crores in that half. That has, putting both together, it was 5.62, which is 5.91 now. But if you remove that extraordinary item, the profit from 3.42 has gone up to 5.91. So 1% profit has gone to 1.41. If you see on a total basis, from 1.7 it looks profit is going to 1.41. But if you see on elaboration, there is 2.2 crores of additional profit into our balance sheet in H2 of last year. And that's not an operational profit. That's a profit of sales of assets. Hopefully I have made my point clear.
Yes, absolutely clear. Okay, and just one other question, sir. How much, do you have any order book that we are expected to deliver this year?
Sir, we always carry an order book of minimum 2 to 3 months. our business is not seasonal. It's a cyclic business, and it moves on month-to-month basis. We never book the order for an annual because the price of metal keeps changing. So we keep our order book for 90 days on which we can hedge back to back with London Metal Exchange.
And what is the order book looking like for the next 2-3 months?
Every month company is doing, if you see for last 6 months, I can tell you, we started with roughly 78 crores or 88 crores first month, second month. Then we moved to 110, then 109, 107. Last month we did 97 point something. So we are doing on a consistent basis of approximate 100 crores for last 6 months. So I expect the performance is going to be slightly improving from here until this H2 ends. And after H2 next year, I think there will be further increase by 5 to 10% into next financial year.
And that's because of the Zambia operations coming to play as well as...
No. Zambian operation is totally different, sir. Zambian operation is basically a mining division. Mining division operations takes time. Identifying the mine, doing the exploration and starting the mining is not going to happen in quarters. It's an investment phase, but in Zambian operation, we will be starting some trading activity. From there, we will be taking material from India and selling it to the Zambian markets. That will be the first step that we are going to start in the second half of this year. Meanwhile, the Zambian operation actual mining profits are going to come in 2 years. But the trading profits are going to start from next half. And we are also in dialogue with some cable company there into Zambia, where company is interested to buy their equities and step into the Zambian manufacturing business there itself into Zambia.
Perfect. Thank you very much for answering the question, sir.
Thank you, Kapoor sir. Thank you.
Thank you. The next question is from the line of Nitin, an individual investor. Please go ahead.
Yes, Mr. Nitin.
Hi, sir. Am I audible?
Yes, you are well audible.
Thank you, sir. Congratulations on a great set of numbers. I had just a few queries on the point you explained about the next year's revenue. You said that you'll be doing 1,500 to 2,000 CR in revenue in FY26 with a double-digit margin. So double-digit margin, would that be EBITDA margin, I suppose? Is that correct?
No. You have mixed two things. Double-digit margins are going to come when the Zambian operations of mining will be in place. Make it clear, double-digit margins will come only when Zambian mining operation starts.
Sure.
You are getting my...
Yeah, sure.
1,500 to 2,000 crores is not including the mining operation sales.
Okay.
Mining operation will need 1.5 years. Double digit will come by FY26-27.
Okay.
But our top line will be going to 1,500 to 2,000 in FY25-26.
Okay. Yeah. And FY26, what would be the margin? Would it be similar to 5-6% or would it be?
It will have you will see a growth of roughly 15-20% into our margins.
Okay.
Yeah.
And so just one other thing. Now, you said double-digit margins in FY27, probably when the Zambian operations they kick in. So what would a PAT margin translate into in FY27?
Sir, if EBITDA is growing by 3 to 4 basis points,
okay,
PAT definitely will grow by minimum 3 basis points.
Okay. So basically what you're saying in the next 2 to 2.5 years,
Yes.
PAT margin profile would go up from...
It will be 7 to 8%. It will come around roughly 6 to 8% in between that range.
And that is PAT margin?
That will be the PAT margin.
Oh, that's fantastic. That means our PAT margin would really, PAT would go up by 3, 4, 5x, I guess. Because currently it's only 2% margin that we have.
Yeah.
Oh, okay. Oh, that's a great news. Great. Thank you, sir. Thank you. Thank you so much for giving me this. Thank you.
Okay.
Thank you. The next question is from the line of Mahesh Seth, an individual investor. Please go ahead.
Hello.
Yes, Mr. Mahesh.
Yeah, good afternoon, sir. Can you hear me?
Good afternoon.
Yeah. So, my first question is, can you outline the CapEx plan for the upcoming year and how they will be funded?
Which plan? CapEx plan?
Yeah, CapEx plan.
As I have appraised you before also, company is planning to invest, to do some CapEx into its subsidiary, that is Shera Metal Private Limited, where we are planning to invest roughly 15-20 crores into that project. Dialogue with the bank has already been started. Machines have been identified. And if the term loan is done by next month, I can expect the completion of project by end of this financial year. By March, we will be into production. And this is going to give another further increase into its top line by around 100 to 200 crores for next FY.
Okay. Got it. So around 15 to 20 crores in our subsidiary, right?
Yeah.
Yeah, got it. And my next question is, how does the company plan to maintain its competitive edge in the winding wires and strips industry?
Maintain its?
Competitive edge in winding wires and strips industry.
The winding wire and strip industry, we are doing for last 25 years plus. So we are into this business. This business we know very well, and all the major players who need these materials, they know our company very well. So to maintain this business has never been a challenge for us. And to increase upon, we are constantly working on that, and we are increasing our customer base. It started from Rajasthan. Until last year, we were doing roughly 7 states. Now we have reached more than 13, 14 states in India. Yeah.
Okay.
Yeah.
Okay. And so my last question is, just want to your view on what kind of growth trajectory do you foresee for our domestic market in comparison to our international ventures?
Sir, if I see on year-to-year growth, I can see a company will be growing at a rate minimum 30 to 40% on year-to-year basis.
Okay.
Yeah.
30 to 40%.
30 to 40% growth will be there on an average for coming 5 years.
Okay. Got it.
Yeah.
Thank you, sir. Thank you for answering, and thank you for watching.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1. The next question is from the line of Aditi Roy, an individual investor. Please go ahead.
Congratulations, sir. My
Thank
first
you.
question is, are funds raised via IPO of Shera Energy and Rajputana Industries fully deployed?
What is your question is not very clear to me, madam.
So my question is, are funds raised through IPO of Shera Energy and Rajputana Industries fully deployed?
Fund raised through IPO?
Yes, sir.
They have been utilized.
Yes, sir.
They have been deployed, yeah.
My next question is, what kind of growth we can expect in next 2 to 3 years with the various investments made?
Madam, globally everything remains positive or stable. I can foresee a growth of 30 minimum, 50 around. We will be growing on year-to-year basis.
Okay, sir. Thank you, sir. And congratulations once again.
Thank you.
Thank you very much. As there are no further questions from the participants, I now hand the conference over to Ms. Chandni Chande for closing comments.
Thank you everyone for joining the conference call of Shera Energy Limited. If you have any queries, you can write to us at research@kirinadvisors.com. Once again, thank you for joining the conference.
Thank you, everyone. Thank you.
Thank you. On behalf of Kirin Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your line.